Are you an investor or a speculator? This is more than just a label. It's a fundamental question that will shape every financial decision you make and ultimately your entire financial future. Take a moment to really consider it. Do you approach your money with a plan, or do you let emotions and trends guide your choices? This single question shapes your financial destiny. It determines whether you will build a foundation that lasts or find yourself constantly starting over. The difference between investing and speculating is the difference between building a legacy and chasing fleeting wins. Are you building real lasting wealth that can support your dreams, your family, and even future generations? Or are you simply hoping to get lucky? You're riding waves of excitement without a clear direction. Or are you just chasing the next hot tip, gambling with your future and letting the market's ups and downs dictate your peace of mind? Most people get this wrong. They follow the crowd, buy what's popular, and let fear or greed drive their decisions. They react to headlines, rumors, and hype rather than relying on research or a solid plan. And then they hope for the best, crossing their fingers, wishing for luck, and feeling anxious when things don't go their way. But true investing is about discipline, courage, and independent thinking. It's about having a strategy, sticking to your principles, and not letting short-term noise distract you from your long-term goals. It's about seeing value where others see risk and recognizing opportunities that others overlook. Investors look beyond the surface, searching for real potential, not just hype. And it's about having the patience to hold on when everyone else is panicking, trusting your research, your process, and your vision, even when the world seems uncertain. This mindset has separated the truly wealthy from the temporarily rich for generations. The greatest fortunes are built not on luck, but on patience, wisdom, and the courage to think differently. So, are you ready to stop gambling and start investing in your future? The choice investor make on this could define his financial story for years to come. Let's dive in. It's 1979. America is in the grip of uncertainty. The streets are alive with the energy of a new decade, but beneath the surface, anxiety simmers. The world is changing fast, and no one seems to know what's coming next. Inflation is raging, the market is stagnant, and even the brightest minds are confused about what to do with their money. Gas prices are soaring, lines at the pump stretch for blocks, and headlines scream about economic turmoil. Investors are paralyzed, unsure whether to hold on or bail out. Against this backdrop, at Yale's 25th reunion, Joe McNay, a respected money manager, challenges his classmates. The reunion is more than just a celebration. It's a gathering of minds searching for answers in a world that feels upside down. He stands before them and tells them to ignore the market's darlings, the nifty 50-50, and instead look at the forgotten, unloved companies trading at rock bottom prices. He questions the wisdom of following the crowd, urging his peers to dig deeper and think differently. McNay's message is clear. Stop chasing hype, find value where others aren't looking. The real opportunities, he insists, are hidden in plain sight, overlooked by those too distracted by the latest trends. He urges them to be brave, to think long-term, and to trust their own judgment. It's not easy to go against the grain, but McNay believes that's where the greatest rewards are found. This wasn't about stock tips, it was a call to become true contrarian investors. He wanted his classmates to develop the courage to question consensus, to look beyond the obvious, and to have conviction in their own research. For those who listened, it was life-changing. They discovered a new way to see the market, and for some it marked the beginning of a journey toward lasting wealth and independence. The crowd is almost always wrong about where real wealth is made. True success, McNay believed, comes from having the courage to walk your own path, even when everyone else is heading the other way. What does it mean to be a contrarian? At its core, contrarianism is about thinking independently and daring to challenge the status quo. It's not just about disagreeing for the sake of it, but about questioning popular beliefs and looking for value where others overlook it. It's having the courage to walk away from the herd, even when it feels uncomfortable or risky. Contrarians are willing to stand alone, trusting their own analysis over the crowd's excitement or panic. When everyone is buying, you pause and question the hype. You ask yourself, is this enthusiasm justified, or are people just following each other blindly? Contrarians know that following the crowd can often lead to trouble. When fear takes over and markets tumble, you see opportunity where others see only risk. Contrarians recognize that panic can create bargains, and they're prepared to act when others are paralyzed by uncertainty. The market runs on powerful emotions, fear and greed. Contrarians use this to their advantage, understanding that these emotions can drive prices far from true value. So, they avoid bubbles by steering clear of overpriced assets, and instead they buy quality investments when they're out of favor and undervalued. And this patient approach often means waiting for the right moment, even if it takes time. In 1979, while others dumped old economy stocks, McNay saw bargains. He recognized that the market's pessimism was overdone and that real value was being ignored by most investors. Being a contrarian means doing your own homework, trusting your judgment, and acting with disciplined even when it's uncomfortable. It's about making decisions based on research and conviction, not emotion or peer pressure. This mindset is the foundation of building wealth you control. By thinking differently and acting independently, you put yourself in a position to benefit from the mistakes of the crowd, stand apart from the crowd. Embrace the discomfort of being different, because that's where real opportunity often lies. That's the first step to lasting financial success, having the courage to think for yourself and act on your convictions, no matter what everyone else is doing. Contrarianism alone isn't enough. You need value investing. Value investing is buying great companies for less than they're worth, creating a margin of safety. McNay looked for strong balance sheets, real assets, and consistent profits. Companies the market ignored. He bought dollar bills for 50 cents. This takes work. Reading reports, understanding businesses, and being patient. But the payoff is huge. While others chased glamour stocks, McNay found solid businesses ready to rebound. Contrarian thinking plus value investing is the formula for serious wealth. In 1979, Wall Street loved the Nifty 50, big names trading at sky-high prices, but McNay saw the risk. No company is worth any price. And when growth slowed, these stocks crashed. Meanwhile, forgotten sectors like steel and energy were trading below their true value. Most investors ignored them, but McNay saw resilient businesses with real assets. He knew economies are cyclical and value would return. The real opportunity was buying quality on sale, not chasing what's popular. That's the classic contrarian setup. Finding value is just the start. Patience is what makes it work. The market can stay irrational for years. Most people give up too soon, chasing quick gains and missing out. McNay's approach was long-term. Buy great businesses and wait for the market to catch up. And it's like planting an oak tree. You need time for it to grow. Those who held on through the 1980s saw huge returns as the market recognized real value. Patience isn't passive, it's disciplined, active waiting. Let your strategy play out. That's how wealth is built. The lesson from 1979 is timeless. Real wealth comes from discipline, courage, and independent thought. Ignore the crowd. Focus on long-term value, not short-term trends. Be an owner of great businesses, not a renter of hot stocks. Human nature hasn't changed. There will always be hype and fear. Your job is to do the homework, exercise patience, and stick to your plan. The path to financial freedom is a choice. Be disciplined, be patient, and look where others aren't. That's how you win the game of money.